right now. I'm gonna bust this myth for you. It's like, oh, you have less opportunities when you swing trading. Nah, dummy, you get to monitor way more markets, right? Because spread matters less, commissions matter less, right? So I can trade way more pairs. So get this myth out of your mind that like, oh, if you swing trade, you have way less opportunities. No, just watch more markets and you will have just as many, if not more opportunities.
The worst thing to do trading is to rush everything. That's the worst thing to do with trading. So get into it, start trading like the 1 hour time frame, the 4 hour time frame, and start into get into it like that. Slow things down, start off with swing trading and get into it like that. That's probably, so it particularly as a CFD trader, I would say day trade or swing trade.
What's up, Hydra Army? Welcome back to the Challenge Accepted podcast. And we are bringing you episode 13, lucky number 13. In today's episode, we are going to explain and dive into the differences between different trading styles. We're going to decode everything. Everyone knows that there's scalpers, there's day traders, there's swing traders in the market. And a lot of times there's a little bit of confusion as to, you know, what category do I fall into? What category should I be going for? Right? As a beginner trader, when I first started out, I had no idea. I was messing around with different time frames. And I feel like when you're new, you tend to gravitate towards lower because it moves faster and you want that like gambling excitement. Yeah. But I think over my, trading journey of the last couple of years, going from absolute novice to finally consistently profitable, what a journey. I've really gone from like scalping. I've really gone from scalping into swing trading, and James has done some experimenting as well. So in today's episode, we really want to first break down what it means to be a scalper, a day trader, or a swing trader. And we're going to go into some pros and cons from our personal experience and some of the reasons why we're trading the time frames that we are. Yeah. Well, let's get into it. So for scalping, I tend to define scalping as someone that holds trades duration for 1 to 2 hours maximum, right? Like you're just in and out of the market very quickly. You're probably trading on the 1 minute, 2 minute, 5 minute type charts, maybe 10 minutes, maybe 10, 15 minutes. But that starts to, every candle is 15 minutes. So you only get 4 candles in an hour. So, those are the timeframes that you tend to be executing on. And then for intraday trading, it's usually for people that are just looking to capture the move, the volatility within a single day. So I would say you're holding your trades for less than 24 hours. And for swing trading, everyone that kind of holds trades multiple days, I would consider that swing trading. One category that we're not going to get into today is position trading, which is really like very high time frame, more like hedge funds. People like Warren Buffett, they're like looking at capturing maybe a year or even longer, kind of buy and hold. Which I don't think a lot of prop traders or retail traders want to fall into that because we're looking for opportunities. So I just wanted to create these buckets first. They're so that we can have an easier discussion around this. And I don't think that there's a concrete, like, if you hold trades for 2 hours and 5 minutes, you're now an intraday trader. It's really like a gradient. It's more like a sliding scale, right? Like you have scalping on one end and then swing trading on the other. And it's kind of, you just move along the gradient. So it's not like a hard bucket. All right. So we're going to start on the lower end of the gradient. For the people with ADD, for people and there's no better person to present this than James, because James has
I do have ADD, 100%, dude. I just want to let the person know that they commented about my sunglasses, that you shouldn't be taking advice from me with my I'm not wearing them right now, so now you can see my beautiful blue eyes. But as you can see, I have to do things on the desk to keep myself preoccupied.
So we're gonna let James talk about scalping a little bit, and we're gonna get into some actual concrete stats here. We're gonna get into Tradezella and show you all the good stuff. But I first have a question, for James, and this is something that I think is very important for you, like anyone, especially when you're considering what category to test out or go into, is why do you feel like, intraday trading / maybe a little bit of scalping is kind of where you've fallen, it categorically. Why are you comfortable there?
Okay, so basically, I started off on the 1 hour and 4 hour time frames. Obviously, very unsuccessfully because that was my first 2 years of trading. Bear in mind, I didn't even know what a lot size was or anything like that. I was placing random things. So, I then obviously moved down to more like scalping, where I would probably hold trades for less than an hour. I would say that was where I did a lot of my trading. Probably, and that's probably why I have no hair now. Is that I did a lot of my trading for less than an hour. Which was probably done for about maybe 4 to 5 years. And then more recently, I've actually started to trade with maybe 5 to 6 hour hold times. We'll actually get into some of my Hydra, phase 1, phase 2. And you guys know that I'm actually a funded trader now with Hydra. Got to put that out there.
Woo! Oh, they don't know it yet. So last episode, James was still on phase 2. So leave a comment. Congratulate James in the comments, please, because he's now a funded trader with Hydra funding, and we're really looking forward to him making a payout.
Yeah, what I'll do is let me actually get more. I want to get my certificate out there. I'll actually show that. You gotta show that, right?
I'll show the cert. I'll show the
There's actually it's over here. You can actually see.
Just a small flex. All right, guys, just temporary pause. Let James do a little celebration. Hey, let's go. Hey, let's go.
We'll hopefully get some more over the line. I'm going to do 100K next month. So we'll see if we can get some over the line and we'll take it from there. But yeah, sorry, I have to do that.
Amazing.
But so basically, I would say, so I've experienced like the whole realm of trading, if you want to call it that. The swing trading, the day trading, and then the scalping as well. I think for me, and what I want to do going into the future is I don't want to be glued at my screen 24/7. Right? I want to take my positions, let them do its thing, and I'll come back in a couple of hours and see what it does. Right. So I think it's really, what you got to classify. You got to find what you want to do. I think if you want to scalp and you can only trade for an hour, that's probably a good thing to scalp. Go and scalp the first hour of the US Equity Open at 9:30 Eastern time. Okay, you can scalp stocks, anything like that. The indexes. If you want to swing trade, you can trade obviously a broader markets because you're not having to watch something so closely. So I would say if you're swing trading and you don't if you don't have much time on there, swing trading can be quite nice because you can only look at it for 30 minutes. Okay, place your trades, get off the desk and take it from there. If you want to intraday trade, that's I would pace myself at the moment. I'm probably taking my trades during the New York session, sometimes in the London session if I have like a DAX or currency pair that I like to trade in London session, I might take it and I might close it before the end of the day. So it depends what you want to do. I think you got to find who you are as your characteristic. I think for so many years, I mean, I scalped that you guys heard. I scalped for many years. I got no hair, ADHD. I don't like to be. I'm kind of was over it, bro. I wanted to slow things down personally. So yeah, that's what I would classify as swing trading, scalping, and then intraday trading, call it.
So let's talk about a little bit more about the scalping side, right? Like let's talk about pros and cons a little bit. As someone that has extensive experience with scalping in and out an hour, sometimes even less, right? Yes. What are some of the pros and cons, and who is this suitable for?
Sure, scalp. So let's speak about scalping. Yeah, sure. So I would say scalping would be suitable maybe for someone that, first of all, maybe cannot be on the desk all day or check their phone. Maybe they work where there's no internet. Maybe they work where they can't be on a laptop or on a cellular device to check their stuff, their trades, so they can only scalp literally for an hour. And you want to be in and out within that hour, make your bucks, get off the desk. Probably also suitable to someone that can make quick decisions, very accurate decisions very quickly, which I enjoy doing, but sometimes it can be quite stressful. So you need to know, can you make fast decisions and accurate decisions very on the spot, very quick. That's where I'd say scalping is probably suited for that type of style of person.
So it sounds like, pros and cons, very simply broken down for scalping would be, it doesn't necessarily require a lot of time, right? If you have a specific time window, and I know that Cam, our co-founder for Hydra Funding, he started off only trading the US stock market open. That was his bread and butter, like the 1 hour open, and then he's done, right?
Yes.
You hard commit to this window. So if you have a very limited amount of time and you need things to move quickly, scalping may be something that you want to consider, right? And it also depends on your personality, right? Like if you have ADHD, maybe you need things to move a little bit quicker. But I think that's probably a very valid point. And that's not something I even considered before. That's probably a pro. I would say that time commitment is probably a pro. And you kind of have a focus period, it almost sounds like, right? If you're saying every day at the market open, I'm there for 1 hour. And then if I don't get a trade there, I'm done. If I get a trade, whatever it is, 1 hour cut off, I'm good. That gives you a window of focus where you can maybe set things up for you to perform at the highest level for that 1 hour.
Yeah.
And what would you say are maybe some of the cons of trading that, besides losing your hair, which we know?
Yeah. Yeah. Cons would probably be, obviously, you could be in a trade. Maybe let's just say it was on, let's bring up my chart here. I had some trades actually yesterday on Meta and Microsoft. Yes, I would say these more intraday plays. They're quite a nice position here. So let's actually go like this. Let's get up like that. So this is a play here on Meta yesterday. I took it about 30 minutes after the US stock market opened. It ended up rising for me. I was in at 612. I think my best exit was here around 619. It ended up going to about 621. It's obviously falling off pre-market. But what I would say is cons of this. Okay, cool. If I'm in at 612 and this thing ended up going up to $700 a share over the next couple of days, I would have probably missed out on that because I would have closed my trade within this bracket. Okay, you can actually see if I zoom in here, if I go like this is actually my bracket over here. This is the pre-market hours. Post-market hours is the dark shaded off stuff. And the stock market is only open for 6.5 hours a day. This is the time that it's open, that darker area. Okay, so obviously the con for a scalper, intraday trader scalper, would be that you're giving up the larger move. That's what I would say.
Yeah, so you don't, sometimes because you have such a short window to execute on, you maybe don't get to catch the entire thing and you just looking to get in and out, right? Especially if you're just like, you have a hard cutoff at like an hour, you're just looking to close. You're like, okay, cool. I'm going to take my money. I'm going to run. I'm going to go do the rest of my thing. All right. So,
correct.
And I would say actually, a con that we have to bring up is the lower the time frame you're trading, the more spread and commissions start to eat away at your profits. Okay, if you dream of trading the 1 second chart or the tick chart, honestly, I don't know if anyone can trade those profitably, except maybe certain pairs where the spread is really, really extremely low. Like for example, on hydro funding, if you're trading EU and gold during liquid hours, the spread can be 0. Like it can be 0 to 0.1. So it really, you have a very limited amount of pairs that you can maybe trade if you're really looking to capture, certain moves. You need very liquid pairs. It's what I've found, right? Because I've traded the 1 minute chart before, and I've really found that sometimes slippage on certain pairs are not as liquid. For example, like some of the pairs I trade right now, like a Euro AUD, I would not even dream of scalping this pair because I would get eaten alive by spread, by commissions, and then by slippage because it's just not that liquid of a pair. You're using higher leverage because your stop losses are smaller, right? You're taking larger position sizes, and the books sometimes are not that thick. If they're too thin, you're going to get filled at a worse price. So that is something that you have to be prepared for mentally as a scalper. Is you have to be prepared to eat more in terms of spread, commissions, and that maybe takes away your edge a little bit. Is probably another con that I found from trading very low timeframes, is I feel that like my results were not as consistent. And there were even times when I would go on tilt because, I maybe ended up taking a double loss because like my stop loss, like just the books weren't thick enough to fill. They were a little bit thin. Ended up taking a 2R loss instead of a 1R loss. And then you definitely psychologically can be impacted by that. And that was one of the things that made my trading go off the rails sometimes, which is why I moved away from this time frame really, is because I just found psychologically I started to suffer whenever I endured some of these unplanned losses, or I get filled at a worse price and then my RR is all fucked up, right? Like there were just things that I didn't like. So those are some things you have to look out for as far as scalping. And now we know that James moved more into an intraday trading style, maybe to try and grow his hair back. We'll see how that works.
We'll see if that works.
But James, maybe you want to share some of your Tradezella stats. Let's look at some average hold times for you. Let's take a dive into the numbers and see what people can expect for this intraday trading category, which I personally think like executing on the 15-minute time frame is like this really sweet spot. Just it really is, because I've traded that time frame as well, where spreads, commissions matter a lot less, right? But you're still able to get in and out within a day. But let's look at some of James's numbers and we'll go from there.
Yeah, so this is from Hydra phase 1, phase 2, and the funded. I'm currently down just under 1% on the funded account at the moment. And so this is some of this is the stats from all of those accounts, phase 1, phase 2, and the funded. Okay, you can actually see over here, my base month was $3,800, lowest 2,000, average 2,091. Okay, so basically over here, average winning trade, okay, 271, average losing trade, 159. And this has actually been quite interesting, DY, because remember that my RR was close, like less than 1-to-1. But now that I've zoomed out, it's actually been quite nice for me to just slow things down. I don't know if that's a consequence or not consequence, a pro from actually zooming out. Because sometimes I know for me, when I was on those lower time frames, you don't want to take the loss, because you could take a loss like literally within 10 minutes. And then you'd actually maybe let it hit your full stop loss instead of actually pulling it. You can see my average hold time here for all my trades is 6 hours and 30 minutes. My average hold time for my winning trades, 4 hours and 38 minutes, and my losing trades, 10 hours. So I'm definitely so susceptible to let my losing trades.
That is very interesting. That is so interesting that your average hold time for your losing trades is longer than your average hold time for winning trades. I was not expecting that.
Yeah, it's probably definitely because I don't want to take the loss. And I can see it sitting there, and then I'd rather like, nah, if it hits my full stop loss, it hits my full stop loss, and I'm getting taken out. But something, and then average winning day, 610, average losing day, 469. So I'm better than 1-to-1 over there on the average winning day, losing day, as well as my trade by trade statistic as well. My largest profit has been $1,200, and my largest loss has been $518. So I think that's pretty. That's kind of what you can expect from like an intraday type trading. Not really scalping, because as you can see, I'm holding for a couple of hours on these. So yeah,
and these numbers, let's give some context, right? This is on a 50K two-phase challenge, or two-phase Hydra challenge. So this is you can kind of look at these numbers and understand, where you kind of fall, average wins, average losses, and then based on the risk management that James is doing. And I think this is a very, very good example of intraday trading, right? Like you're kind of holding trades a couple hours, you're letting the moves play out. Like we know, for those of you that have been on watching the podcast and following James's trading journey, you know that when he was scalping, a lot of times his RR was less than 1, right? He had a very high win rate, but the RR was less than 1. And this, I think, is a very interesting example of how that can shift when you go to a different time frame, when you take a little bit of a zoomed out approach and you're kind of letting things run and ride out a little bit more. And I would say, what do you think are some of the cons of doing intraday trading versus, let's say, scalping?
Sure. Probably some of the cons can be that I have seen this on some of my trades. And sorry, I just wanted to go over here. Actually, my best tickers was actually Euro JPY has been in the last on these accounts, Euro JPY, Bitcoin, and the DAX, and then the S&P 500. So those have actually been my best traded.
And those are all very liquid pairs, guys. Like I really hope that you understand that. And especially on Hydra Forex accounts, I can tell you that even on a Hydra Forex account, not the crypto account, the liquidity on Bitcoin is great for day trading. I've done Bitcoin trades intraday myself. So we see that James is picking Euro JPY as one of the most liquid Forex pairs, right? Bitcoin is the most liquid cryptocurrency. German 40, obviously tons of liquidity during market hours, and S&P, we don't even need to talk about that. The biggest it is in the world, right? So very liquid markets. So the spreads are lower, right? If you are looking to get into this intraday category, these are the pairs that you need to pick. You need to pick liquid pairs, and you need to trade them during the correct times so that you get the best order book depth as well as the best spreads.
Yeah, agreed. Okay, so yeah, I just wanted to show that. So I've come out the negatives, I would say, and I have seen it on some of my trades that used to be winners, was like, let's say your stop losses used to be 20 points, let's just say on the DAX, but now you've moved it up a little bit because you want to intraday swing, and it's now 60 points. Sometimes your trade could go 20 points in your direction, flip, and then take you out. Whereas like in the past, that could be a winning trade, but now obviously it's
because you're just getting out quick, right? You're just getting out quicker. Things don't reverse on you as quickly. That makes sense considering how your RR has changed, right? And that's something that you guys have to take into account as well. If you're going with bigger RR, it's not a no downside situation. If you're going to go after bigger RR, a lot of times it's going to reverse, either stop you out of break even, or it's going to reverse and stop you out completely, right? If you're, the longer you hold, the more you risk things turning back and giving back gains. That's just a very natural part of the process. There's no one that's winning 80% of trades and 10 RR per trade. That's, you know, it's not going to happen. It's always an inverse relationship. Okay. So that's a consideration. You guys have seen some numbers from James on his 50K challenge, trading now intraday timeframes. And it's interesting because we've gone from like the lower RR, higher win rate, and then now we see that your RR has gone up to just under 2. I think it's like 1.8.
Yeah,
RR
actually, let's see what my win percentage actually. That would actually be quite interesting. My win percentage actually over here. That would actually, that's what we, there you go. My win percentage, trade win percentage actually dropped a little bit. No surprise.
We're used to seeing you in the high 70s, right?
High 70s.
Yeah.
And my RR was about 0.7. Now my RR is 1.7 and my win rate's 68. So
obviously those are very healthy numbers.
I actually had a streak over here. Look at DUR. My base streak was I bounced back from losing days very nasty. My base streak was 10 green days in a row. My worst red streak is only 1 red day in a row.
This is also in part, right? Another thing we've discussed before is, you know, win rates tend to drop the more RR you go after. It's just an inverse scale, guys. There's no, you know, there's multiple ways to skin a cat. It really, you have to find that part on the gradient for you guys, right? So now that we've gone through a little bit of the pros and cons with intraday trading and some of the keys that you should look out for, I'm going to go into the swing trading side, because I've been swing trading since I started back in August, and I had my best month swing trading in December. We'll take the most recent data because I took 42 trades that month, which if you think about it, 42 trades is quite a lot for a month. And I'm swing trading, and I want to bust one of the biggest myths right now. I'm going to bust this myth for you. It's like, oh, you have less opportunities when you swing trading. Nah, dummy, you get to monitor way more markets, right? Because spread matters less, commissions matter less, right? So I can trade way more pairs. I'm currently watching about 30 currency pairs, and I've never watched this many pairs before. And I'm also watching gold and some of the top indices, as well as Bitcoin. And when you have 30, 40 markets to trade, there's always a setup. There's always something. And I trade a systematic approach. It's very mechanical. So it's either there or it's not. So I can monitor a lot of different pairs because it's very binary. It's either I have a setup or I don't. I'm not sitting there trying to break down 10 different things. And, you know, like, it's just, I have a rule-based system, right? So if you look at my stats here, I'm going to just see if I can zoom in a little bit on these. Cool. I'm going to save Rick some work. Rick, you can thank the big. We're going to go with
You didn't teach me how to do that, DUR. I don't know how to zoom in. I'm just a trader.
Are you on a Mac or Windows?
Windows PC.
So you just hit Control and then you use your mouse scroll bar and you scroll up.
Okay, interesting.
Yeah, there you go. Life hack, secret hack. All right, so if we look at my trading system, my average winning trade was 581. So, you know, I'm getting better than 2 RR per trade here, right? And my average hold time, this is what I want to go into. My average hold time, all trades, 2 days, 3 hours, right? I'm probably on the lower end of swing trading because I am executing on the 1 hour time frame. If you're executing on the 4 hour time frame, you can easily expect this to 4x, honestly. And because I'm holding for a higher RR, like my average RR is close to 2.5 on my trades. So I do tend to hold my winning trades, as you can see here, 3 days, 10 hours on the winning trades, and my losing trades, 21 hours. And this makes sense because there's a smaller room for my trades to go down, and there's a larger room for my trades to kind of go towards a profit target, right? So a lot of times when I lose quickly, and when I win, it takes a little while for me to get there. But on average, I'm holding trades 2 days, 3 hours. Like I said, I think that's probably categorizing me into the lower end of the swing trading scale, right? Like, I'm not really like holding trades for weeks. I know Cam's a lot of times trading daily chart setups, and he can hold. I've seen him hold trades from 1 to 2 months. Okay, so that's, you know, that's pretty long, right? But this is where I've found, let's get into pros and cons, right? Like I've really found tremendous happiness trading this way in the swing trading charts. Number one, because I find that I get way more opportunities and I care less about the missed trades, right? A lot of times, when you're day trading scalping, when you miss it, that could be your setup for the day and it's gone, because you're watching maybe one or two pairs, especially if you're scalping one or two pairs. Intraday, maybe you can get up to 4 or 5 different pairs that you're kind of watching, and I hated that. Like, and that would I would hate missing trades. But now, because I have so many markets I'm monitoring, I actually get way more. I was never even able to crack 30 trades per month when I was day trading. That's very honestly, my record. Like a lot of times I'd be at 20 for a month, and now I'm easily getting 40 to 60 trades every month because I'm just monitoring way more markets. And so get this myth out of your mind that like, oh, if you swing trade, you have way less opportunities. No, just watch more markets and you will have just as many, if not more opportunities. And another pro, this is a lifestyle pro, which is I don't have to be on the charts at a specific time, right? My trades kind of happen. If we go back here, right, you'll see I can go into the, you'll see that my trade time, right, is kind of all over the place. There's a time period when I'm sleeping, which is you'll notice I sleep from about 2 to, well, I'm not sleeping this entire time, but I start shooting around 10 a.m. I sleep pretty late. I'm a night owl, right? Like, so I usually go to bed like 2. So you'll see that this is my sleeping time. And then I kind of take trades throughout the day. You'll see I took some losses here. It's just whenever I have time to be on the charts, I get on and I try to execute. Right. And then if I don't have time, I'm just not there and it's okay. Right. So it's a lot more flexible. That's one of the biggest pros that I've noticed about swing trading. It's a lot more flexible. And of course, the spreads commissions are so minuscule compared to your profits. And I really like that. That provides some stability in your trading. And as someone that I'll admit, like psychologically, I am probably more prone to tilt than the average. And my priority for swing trading really has been, my biggest favorite has been how tilt free things have just become easier for me personally. Like that excitement of like up and down, that like, not just leave me out of that. I want to just like set and forget. I just want to take a trade, enter it, minimum management, minimal input from myself. So these are some of my numbers that you can take a look at, right? So anyone that holds trades longer than me, you're definitely in the swing trading category. And some of the cons, I would say, for swing trading, none. I fucking love it. No, I'm kidding. Some of the cons for swing trading, I think a big con for swing trading would be if you're the type of guy that wants to just sit down and focus, right? I love that about day trading. It's like I trade a session. Right? I'm New York session. I'm there. I'm locked in. And this is my trading time for the day. Whether it's an hour, 2 hours, 4 hours, it's a very regimented schedule. Whereas with swing trading, it's kind of like you gotta stay on all the fucking time. Like you gotta monitor the markets. If you manage your trades, you got to be aware of like when something is running. So sometimes it can be a constant stressor on your mind if you have open trades, if you have multiple open positions. It can be something like I've held trades for as long as like 2 weeks, and it took a while for me to get used to that ongoing like, hey, I think I'm at a place now after a few months where it doesn't bother me anymore. But at the beginning, it felt like there was a constant stress, right? It felt like there was constantly something. I'm like, oh, am I going to win this trade? Am I going to lose this trade? But I feel like that goes away after a while. But you have to get over that, and you have to be able to hold. You have to be able to go to sleep with open positions. And some people are just comfortable with that. It's a different psychological game, right? Like with scalping, day trading, when you're out, right? You got nothing. You got nothing going on. You're not in anything. Whereas with swing trading, you're always in something. There's always something going on, right? So everything impacts you. All the news impacts you. Everything will impact your trade. So there's a part of you that has to stay switched on all the time. I would say that's probably the biggest con. So with that flexibility comes, this additional different type of stress. I would say you don't really get to switch off, which I think is the kind of like the biggest con as far as, what I've experienced with swing trading. Sure. So that's kind of a wrap on today's presentation with all the different trading styles. Right. To recap, James, just end it off. What's the type of career personality, like swing trading and day trading. Let's like put them together because I think very similar types can trade those.
Yes.
Who would you recommend swing trading, day trading to? Let's talk from like beginner versus advanced. Like especially for beginners, do you think they should go in that direction or maybe?
I think beginners should probably start off swing trading personally because it's an easy way to get into trading. You don't have to watch the charts every single second. It just slows things down. I think the worst thing to do trading is to rush everything. That's the worst thing to do with trading. So get into it. Start trading like the 1 hour time frame, the 4 hour time frame, and starting to like get into it like that. And then if you're like, hey, well, let me go see what this day trading thing or scalping is actually about. Personally, I think after experience, I think after paying so many commissions to my broker for so many years, I don't think you should be scalping CFDs. Probably go scalp futures if you want to scalp. But CFDs, I would say you best to probably day trade. So take a trade, hold it for a couple of hours, as you see, like me. Take a trade at 3 p.m. in the afternoon, like our trade of stocks or index or something like that. Hold it for a couple of hours, close at the end of the day, or swing trade. I don't think scalping CFDs is this yes, can you make money doing it? Probably, yeah, you can. I did it on the 1 minute chart, but I would still classify I wasn't scalping it like 5 times within an hour. I still wasn't doing that. I would, you pay a lot of commissions. So I'd slow things down, start off with swing trading and get into it like that. That's probably, so it particularly as a CFD trader, I'd say day trade or swing trade.
I think that's a very solid advice. And the biggest thing to consider, especially for beginners, one of the biggest things I preach to beginners is patience. Just be patient. Wait for your setups, right? Like, and it's better that the higher time frames are moving slower for you because there's technical skills. You have to learn how to set up your risk management. You have to learn how to execute orders. Like, you want things to move slower. And although that's not the path that I took because, I'm mentally R word. I just went balls deep into like low time frames. I got destroyed. So if you want to get destroyed like me, start on the very low time frames, blow up your account, But if you'd like to take some advice from someone that has done it that way, I almost did the reverse, right? Like, start from the higher time frames. You're gonna do much, much better. But I don't know, like things don't move as fast. So if you're very impatient, you just start scrolling lower, lower, and you're staring at the chart. You're like, oh, this 1 minute's going bullish. That was me. Okay.
Yeah.
I would say like, especially scalping, the nuances day trading, definitely I would recommend to more advanced traders or at least with some experience under your belt. You know how to deal with things like commission spreads. You know how to deal with slippage. You know what market hours and sessions to trade. You go into that. And for swing trading, I really think swing trading is friendly to pretty much everyone of all levels, right? Like I'm getting more and more experience now, and I've really found my groove and my niche in swing trading. It's a lifestyle personality fit. But I think it's also friendly for beginners. Like if you're executing a 1 hour, 4 hour, you're gonna be able to take your time, breathe. You're not gonna need to make a decision within 10 seconds because that's how it is when you're scalping, executing. If it's gone, it's gone. You have maybe 10, 15 seconds, maybe a minute sometimes to make that decision and execute that trade. And that's additional pressure. Okay. So I hope today's episode has been helpful for those of you that, are interested in maybe exploring different trading types or kind of wondering, hey, like maybe swing day trading's really, I'm struggling with it and I'm not sure if it's for me. I hope today's episode was helpful in kind of shedding some light because James and I have both been on very different journeys as far as the time frames that we're trading and how we approach trading. And I hope that some of our numbers today kind of show you a little bit of what to expect, as far as going into these different time frames and even going after different types of risk reward ratios. So we're going to wrap up the session, the podcast for the day. And I know a very interesting statistic. We're all about numbers. 75% of you that watch our channel, this podcast, are not subscribed. So if we could do a big favor, subscribe if you're still here. We really appreciate you still being here listening to us rant on about trading. Subscribe if you can, hit the thumbs up button, leave us a comment below. All of this helps us with the YouTube algorithm as a new and growing channel. And we look forward to creating more awesome, insightful trading content for you guys. I hope you guys have a good trading day ahead. See ya.